Hi, this is John Graham from Neighborly Financial in Roseville, California, and I'm here today to talk about how to get the best rates and how to pick a good lender or broker. In order to get the best rates, you want to start by finding a good lender or broker. Don't focus on the rates and fees that they advertise in the newspaper or on the internet. These can be somewhat misleading. You also want to be aware of catchy phrases that say no cost, no out-of-pocket costs, no fees, or no points. These can be very misleading and are often thrown out there just to get you to call that particular broker. You want to make sure that the lender is focusing on your long-term goals, not the next transaction. And make sure that they share a small number of options with you. If they only give you one option, be careful, or if they give you 1,000 options, that's another big flag that you don't want to use them. They should have a clear process that they follow as they go through this process. They should be asking you questions about your FICO score, which is a number between 300 and 850. Anything below 620 is considered bad credit. Anything above 720 is considered acceptable. If you don't know what that is, they'll ask you questions about your debts and payment history on those debts. They'll be asking you questions about your income, your wages, bonuses, overtime, and such. They'll be asking you about the size and the type of loan that you're interested in, and also they'll be asking questions about the type of house that you have. They'll also look and ask some questions about your long-term goals. You want to make sure that they're focused on getting you the right loan for your situation. They should give you 2 or 3 options when it's all said and done, and explain what the differences between those options. Now, when you get through this, you should be interviewing several different lenders, and you should try to narrow it down to 2 or 3 lenders. And when you have it narrowed down to 2 or 3 lenders, this is when you really want to start to focus on the costs and the fees of obtaining that loan. What you want to do is pick a rate that you are interested in and make sure you give them all the same rate, because this allows you to do a better job of comparing apples and apples. So give them the rate that you want. And then what you want to do is get it in writing. Get a good faith estimate from them. Now, prior to 2010, the good faith estimate was an estimate. As of January 1st, 2010, a good faith estimate is a pretty strong commitment for those costs and fees. So you can be pretty assured that when you get a good faith estimate today, that it's a pretty solid estimate. Then what you want to do is, once you get the good faith estimates from the different lenders, compare the rates and fees and ask for them on the same day. So this really allows you to compare the same rate on the same day, and it really helps you narrow down and understand the fees that they're charging you for that loan. Then the other thing is, if you have any questions about the good faith estimate, make sure you get explanations. And one other point on this is, in the good faith estimate, there's several accruals for taxes and interest on those loans. Ignore those at this particular point in the process, because these are more accounting adjustments for that particular loan, and they really don't address the issue of the fees and the costs from the lender. So ignore the accruals at this point. If you have any questions, sit down with the lender and really have them explain what all this means. And then also, one other question is, ask them how much they'll make on the loan. This is a real critical question. And again, I hope this video helps. This is John Graham from Neighborly Financial in Roseville, California. You can find us on the web at www.neighborlyfinancialmortgage.com, or you can call us. We're at 916-799-4336. If you have any questions, give us a call.